Hi, Minuteman 6 here from Minuteman Precious Metals. It's August 12th, 2024 at approximately 7 a.m. Eastern Standard Time, and this is our morning market update. Before we get started, please hit that like button. If you're not a subscriber, I'd love to have you. I post new market video updates Monday through Friday, so just ring that bell icon to be notified of new videos. Gold is up $13.44 to $2,444 at the time of filming during overnight trading. Silver is also up 48 cents to $27.95 this morning. The gold to silver ratio is down to 87.49. The latest Kitco News weekly gold survey shows most industry experts predicting sideways price action this week, while the majority of retail traders expect gold to post gains. And that's exactly what we're seeing this morning. This week's data highlights include Tuesday's release of U.S. PPI for July, followed by the U.S. CPI for July on Wednesday, July retail sales and weekly job claims on Thursday, and U.S. housing starts and building permits for July on Friday morning, followed by the preliminary University of Michigan Consumer Sentiment Survey for August. Markets will also pay attention to the Empire State and Philly Fed manufacturing indexes for August, scheduled for release on Thursday morning. And with attention now squarely focused on the prospect of a September rate cut from the Federal Reserve, precious metals investors will be paying close attention to this week's slate of Fed speakers. They include Bostic on Tuesday, Musalam and Harker on Thursday, and Goolsbee on Friday afternoon. Market analysts weighed in on their thoughts for gold and silver for the upcoming week. Chief and market strategist of SIA Wealth Management stated, "I'm neutral on gold for the coming week. I just have the feeling that coming off of a volatile 10 days, markets may settle down a bit next week before the Democratic convention starts the following week." Mark Chandler, managing director of Bangkok Burn Global Forex, also expects gold to trend sideways, at least at the beginning of the week. He stated, "I think that the market may have exaggerated the likelihood of a 50-point basis cut, let alone an emergency intermeeting Fed cut. U.S. coupon yields have firmed." Chandler said this week's highlight will be the CPI report. It's likely to be unchanged on a year-over-year basis, which will meet the low bar of the Fed's September 25-point basis cut. He stated that China's PBOC did not buy gold for the third month in July after an 18-month buying spree. Still to come is Middle East tensions, and many still expect Iran to strike Israel, which would at least initially be supportive of gold, he added. Adrien Day, president of Adrien Day Asset Management, expects gold prices to move higher. He stated, "Market expectations for an interest rate cut by the Federal Reserve keep changing, and with them, so does the gold price," he observed. But there is little doubt that there will at least be an initial rate cut in the near term, and that will be the signal for North American investors to become more interested in gold, especially with the U.S. economy showing signs of slipping into a recession. Until now, the gold price has been driven with very little interest from Western investors, Day stated, but a cut from the Fed and ongoing cuts from other central banks will change that. Adam Button, head of currency strategy at forexlive.com, is neutral on gold's near-term prospects. A double top at $2,475 is competing with a series of higher lows, he said. "We've also seen a speculative washout. I think that this sets the stage for a week of calming and consolidation, but watch out for Wednesday's CPI report. It likely will put the nail in the coffin for the inflation story." Seanlus, co-director of commercial hedging at Walsh Trading, said the gold market is changing so quickly these days that it's difficult for traders to choose a direction. "You're living day to day, not week to week with this stuff," Luss said. Luss said that since recession fears first flared up last week, they sent everything tumbling, and he still believes the U.S. employment situation is worse than the headline numbers. "The market is contracting in the private sector," he said. "The job growth is pretty contained in governmental hiring, so that really is not sustainable. Longer term, that's the fear, but the emotion sometimes is out of whack versus reality. Luss said Monday's apocalyptic pessimism was just as overdone as the equity market's irrational optimism that preceded it. There are people screaming Monday morning that the Fed had to do a 75-point emergency cut, he said. It's just nonsense. For what? Turning to gold's price action, Luss said he expects gold to remain strong, and while he doesn't see another big move higher in the near term, he believes gold will run higher by the end of the year. James Stanley, senior market strategist at Forex.com, expects to see gold prices rise this week. Bulls are still in control, and they illustrated that well over this past week, he said. Monday's spike low led into a high low on Tuesday, and buyers came back in a big way in the latter part of the week. In my view, they have an open door to retest highs, but there still hasn't been any clear evidence that they're ready to take out the $2,500 mark yet. If they can break the pattern of low highs in spot gold on a daily chart, that $2,500 test widens significantly. The risk to this scenario would be Treasury yields around the CPI report, as a rush for yield can see capital flee gold to chase yields. If you made it this far, thank you for watching. Be sure to check out Minuteman Precious Metals for market updates and analysis. Thanks, and have a great day.